Hi, welcome back to my YouTube channel. In today's video, I'm going to be watching a video that I came across on YouTube. It's a video that is very much relevant today. It's in anticipation of the return of President Donald Trump to the White House. Video title is China better prepared for another trade war with the US? It's actually a question that I asked on Reddit just a few days ago, and I was wondering, hey, should we be expecting a stimulus from Chinese government, one that is much more powerful and strong, because at this time the Chinese government, or I should say the Chinese economy is shaky, it's weak. As you know, the consumer confidence is very low and they're struggling in many different sectors, especially the old sectors. Anyways, let's see what the experts have to say, and yeah, we'll go from there. Not sure if I mentioned, but yeah, this video, the title is China better prepared for another trade war with the US? And the show is Counting the Cost. And I've watched the show before. It's a really good show. They've got their panels always strong with high expertise and very professional. And even the gentleman chairing this conference, the show is he's a very professional, and watching this show, it's honestly it's breath of fresh air, if I can say that. It's so different than what we're used to. Anyways, let's continue.
Hello, I'm Adrian Finnegan, and this is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, China has moved to support its exporters ahead of Donald Trump's anticipated tariff hikes, and its drive for self-sufficiency is accelerating. Is Beijing better prepared for another trade row with the US this time around? He's a billionaire investor. Scott Bessent is Trump's pick for US Treasury Secretary. But can he strike the right balance between embracing the president-elect's policies and maintaining market stability? And Chrome is the world's most popular web browser. It's also an important part of Google's business. But US regulators are demanding the company sell it in an attempt to end tech monopolies. In 2018, when Donald Trump launched trade restrictions on China, its economy was flying high. Today, though, the nation is struggling with a real estate downturn, a debt crisis, and deflation, all of which are dragging down its economic growth. This has made many Chinese companies shift to focus on sales abroad. But US President-elect Donald Trump has recently vowed to raise tariffs by an additional 10% on all Chinese imports as soon as he takes office. This time around, China looks to be prepared for another trade row. It's announced measures aimed at supporting its exporters ahead of the start of the second Trump administration. But are they enough? We'll discuss that with our guest shortly. But first, Uma Kulsum Sharif reports.
Honestly, I had no idea that China has already announced some measures to support their exports. That's news to me.
China's President Xi Jinping on a diplomatic offensive. Since Donald Trump's re-election as US president, the Chinese leader has been shoring up support at global events. Trump's return to the White House has stirred fears that tensions between the world's two largest economies could worsen.
If we treat each other as opponents or enemies, engage in vicious competition and mutual harm, China-US relations will suffer setbacks or even regressions.
Xi's plea for a smooth transition have been met with more threats, with Trump announcing he intends to impose major tariffs on the United States' three largest trading partners. He's promised 25% tariffs on Canada and Mexico and an additional 10% on all Chinese imports when he takes office on January 20th. Shortly after Trump's social media posts, the Chinese embassy spokesperson tweeted to say there are no winners in trade wars. But Beijing has been bracing for Trump's return to the White House with his America First policy and threats during his campaign of tariffs as high as 60% on Chinese-made goods. In his previous term, Trump imposed tariffs of up to 25%, triggering a retaliation from Beijing.
The way they will sell their product in America is to build it in America. Very simple. Build it in America and only in America.
Beijing has unveiled new measures aimed at boosting the country's foreign trade. They include more financial support for firms, expanding agricultural exports, and imports of energy products.
历史也已经表明 The Ministry of Commerce will work with local authorities and relevant departments to closely monitor foreign trade operations, analyse changing conditions, ensure the implementation of foreign trade-related policies, and help foreign trade enterprises keep orders stable and expand markets, so as to provide strong support for sustained economic recovery and growth.
Trump's second term comes as China is struggling to kickstart its flagging economy. A $1 trillion plan is in place to help clear local government debt and fix an ongoing property market crisis. But economists expect Chinese exports to rise, with customers rushing to place orders ahead of Trump taking charge to avoid possible higher tariffs. Exports have already grown since July, putting China on track for a record trade surplus this year. Kulsum Sharif, Al Jazeera, for Counting the Cost.
Well, China's been the top exporter to the US for 2 decades, but Mexico overtook it in 2023. The value of Chinese imports to the US tumbled 20% to $427 billion last year. China's exports to the Group of Seven, or G7 countries, also dropped to under 30% last year. That's down from 48% in 2000. In 2023, China was the third largest partner for EU exports and its biggest importer. Bilateral trade reached nearly $775 billion last year. That's a drop of 14% compared to 2022. Trade between Russia and China has strengthened since 2022 after Russia's invasion of Ukraine. It hit a record $240 billion last year, but exports slumped to almost 16% this March from a year earlier, with growing US threats of war sanctions. However, China has built alternative sales networks. With the Association of Southeast Asian Nations, bilateral trade with ASEAN has seen an average annual increase of 11% from 2004 to 2023. Now, despite setbacks, China remains the top global exporter, with $3.4 trillion worth of goods, exceeding the US by nearly $1.4 trillion. The nation's exports surged more than 12% in October and are poised for further gains. Joining us now from Hong Kong is Gary Ng, who's senior economist at Natixis and a research fellow at the Central European Institute of Asian Studies. Gary, good to have you with us again. Can China somehow circumvent these tariffs that Trump has promised to slap on Chinese exports? Has it done enough to prepare?
Well, I do think it's not the first time that China faced a situation like this. Definitely, China is more prepared than what happened in 2018. So far, we have seen China trying to de-escalate the situation with the non-US market through cutting some of the export tax rebate. At the same time, there are also more demand-side policy that may be rolled out, at least to mitigate part of the impact, away from the US market. But still, it really depends on whether Trump will actually implement a 60% of tariff on China, because right now, if it is only 10%, it's
Yeah, that's it's a good comment, but I do think 60%, going from 10 to 60% is quite a bit, but I don't think Chinese government should be waiting if he does implement that much. Because honestly, as we know, he's not he doesn't really care. He's a strong man and he does not care. And of course, we know there'll be folks and businesses in the US that will be equally or even more hurt with the tariffs, but he doesn't care.
It's possible to see some of these measures working, but if we're only talking about 60%, then the story will be quite different. So China is better prepared, but it's hard to fully detach from the US market immediately.
And if Trump does that worst case scenario, would China retaliate and impose its own tariffs? Are we looking perhaps at a trade war here?
Well, under the scenario of the Trump 2.0 with more tariff, I think this is really something that is quite likely to happen, which basically means the mutual retaliation. But of course, what China may do also depends on what Trump will do as well, because if we are talking about somewhere like 10% or even 30% of tariff of all the goods basically shipped from China to the US, then it's possible to see China doing the same thing. At the same time, beyond the export side, it's also possible to see China restricting some of the core raw materials or basically certain products that China has a very, very big global market share to, in a way, trying to punish or negotiate with the US. This is also something quite possible, even though China may not be able to produce, let's say.
Yeah, that's a very good point. If China wants, they can also stop selling certain products to the US, especially the products where China has the advantage, the monopoly.
The most advanced chips to that sense. So yes, I think we're really heading towards a more intense geopolitical tensions for possibly 1 or another 2 years.
All right, Gary, let's just for a moment assume that there would be a trade war. What would that feel like for the likes of you and I and people watching all over the world? I mean, we've got quite used to seeing goods on our shop shelves from everywhere nowadays. If there were a trade war, would that change?
Well, indeed, I would say if the tariff really gets so high towards 60% or even 30%, right, it will largely hurt the profit margin of the either the Chinese or the US firms exporting towards each other. So basically, it is really a backtracking with what we have seen in the past decade in the globalization, of which countries try to do or optimize the production cost at the lowest way, and therefore consumers are able to buy goods at the cheapest price. So I think this is really something that is dialing back a little bit. However, it also depends on whether there are alternatives at its sense, because the US may be able to do that because part of this import can actually be outsourced maybe to ASEAN, India, or other countries. But if we're really talking about the whole world decoupling from China, then how do you suddenly find maybe the 80% of the China's production elsewhere, where the other countries can actually develop that quickly? I think that is a very, very good question to ask. So in a way, I do think that
Yeah, that's a good point. If China takes if there's a trade war in China and the US, uh, they're not trading as much as before. Who will China sell their products to?
inflation pressure will be much higher than people expected earlier this year.
Gary, of course, China's economy is not in the place that it was at the beginning of the last Trump administration. It's suffering low consumer demand at the moment, the moribund housing market that we've heard a lot about on this program. How would these tariffs, if Trump introduces them on Chinese goods, impact upon an already sluggish Chinese economy?
Well, I think it really depends on where the tariff actually target beyond the exact percentage. And so far, we have seen these stronger measures, probably targeted to made in China goods, which basically means that it's the direct trade between US and China. But at the same time, Trump has also imposed quite a large tariff on some of the partners as well, like Canada and Mexico. So there's actually a worry that this target to was made in China can be expanded to made by China. So I think this is really something that may caught some of the Chinese firms a bit off guard, even though they are more prepared than before back in 2018, because a lot of them has actually moved their production elsewhere, trying to export to the US through the third market. So this is something that we have seen, which is quite different from a few years ago. But still, I doubt whether it can actually fully offset this impact. So which basically means that together with the domestic weaker demand, it's possible to see Chinese growth taking probably still a reasonably big shock compared to before. It's possible to see like a GDP growth decline by 0.5 or to 1 percentage point, depending on the ultimate tariff that are being imposed. So yes, the situation remains quite challenging. So therefore, I do think that China will continue to explore other markets, but this is not an easy job.
Gary, stay with us. I want to ask you about our next item here. Huawei has launched its first smartphone that can run on the Chinese company's self-developed operating system. The tech giant aims to establish Harmony OS Next as a major rival to Apple's iOS and Google's Android, which dominate global markets. The company's early versions of the devices were built using open-sourced Android code. Huawei didn't mention what chip its new Mate 70 phone was running on, but the launch is part of the Chinese giant's push toward
Okay, I think this might be it for the video, but let me just see.
technological influential roles in government.
Okay, so this is it. That was the video. Good interview. My initial thoughts are honestly, there's still a lot of uncertainty. Um, there was no talk about China trying to boost its own economy. Yeah, there was no talk about China attempting to boost its own domestic economy. It appears they are still focused on the exports, and that's okay. That's I guess their bread and butter. Uh, but let's see. Overall, it was a good interview. I think it's more of wait and watch.